Hi guys, welcome back. Roy Cuzin's here, partnered with Light Forex Broker. We're giving you our weekly market video analytics program. And today I'm going to follow up a second time on my bearish conviction on Wall Street. You remember that bearish conviction, more specifically on the Dow Jones, that was established back at the 23rd of October, almost 2 months ago. And I actually followed up on that session about a month ago, on the 27th of November. So if you haven't watched these videos, go ahead and check them out, because today I want to continue, just a natural continuation of the situation. And I got to tell you, the situation is definitely intensifies, no doubt. There seems to be a bloodshed in the market, right? In the stock market in general, on Wall Street to be more specific. And I really want to touch base on the situation. I'm going to bring a little helper to help me solidify my conviction. I'm going to bring the gold to show you a different angle, right? To read the situation in Wall Street, and more specifically on the Dow Jones. So it's going to be really interesting stuff. Stick around and let's go ahead and take a look. All right, guys, so I'm going to dial back to the beginning of this conviction. The very moment I have established a bearish conviction, and I have published that conviction right here on this program. So the moment was where price began to turn around, right? It was on an upside trend at first, and at some point it began to turn around, but that wasn't the major, that was not the main point. The main point was where price broke below this particular key level, 25,855. So that moment, I mean, that was a very important key level. That key level is coming from a higher time frame system, higher time frame setup that I'm going to show you in a minute. But that was pretty much the moment that I got very much interested in shorting, the stock market, shorting Wall Street, or more specifically the Dow Jones. Now, pretty much a month later, when we had the follow-up on the situation, we were pretty much around this area right here. And I specifically said that I think price will actually continue on the downside and not come back and build up another upside leg. Because if you think about it, ever since the breakdown from that main point of reference, that main key level, price actually began to trade sideways. So it was basically developing a three-part move. That's what I call it. That's what we call it. A three-part move, which means we had the first downside segment followed by a horizontal segment. Now, it's never really horizontal segment. It's always going to find its way in the form of a trading range, right? A sideways movement. So think about this back and forth trading range as a horizontal segment, right? And I think right now what we're seeing is the next downside segment, which is why it's going to be a third part move, right? 3 segments. And right now we're building up the third segment on the downside. Now, last time I've touched base here, back at 27th of November, I thought price will continue on the downside straight all the way to my main price target, which was 23,957 right here, right? And also my final destination. My final destination was, and still is, 23,100. 23,100. You can actually see that level has been marked by this green dotted line right here. And I'm going to talk about this level in a minute. I'm going to show you where I came up with this level. But basically, that was my final destination right from the get-go. But I was focusing on this particular K level as the main price target. I have to say this. Now, I was pretty surprised to see price comes back up and break back above that 24,667, which I consider to be an important support. I thought it was going to act as a strong resistance. I was wrong. Basically, price went for another upside leg. But I wasn't completely surprised by this. I was actually prepared for that move. So when I saw price goes back to break above 24,667, what I did was I took out most of my position. I had a bearish position. I took most of it out. And I decided to wait for price to come back to the upper section. And I'm talking about right now, when I say upper section, I'm talking about this black system. Take a look at this black symmetric system here, which pinpoints this horizontal move, right? This is the trading range. So if price came back, crossed that 24,667, I thought it is probably going to end up in the higher section of that black system right here. And I was waiting to hit the nail right on its head. Now, luckily for me, price gave me a serious head start. What it did, which was pretty remarkable, I have to say, it performed an exhaustion gap, right? A classic exhaustion gap. It was so profound because it was jumping right above an important symmetric key level, the mid-high key level 25,632. Take a look. Right from this point, it gapped right above that key level. Obviously, I wasn't, well, I suspected that this may become an exhaustion gap. But at that point, I was just sitting and waiting to see how things will unfold. And as price began to crash to the other side, I knew that I was looking at a classic exhaustion gap. Obviously, what I did, the next move would be to count the legs. And as I counted the legs, I figured out that this should be the next sixth leg, right? Let's count these legs. We have the first here, second, third, fourth, fifth. So I figured out that this should be the sixth leg, and usually, according to the principles of the symmetrics methodology, the sixth leg is the one to break out of the system, out of the trading range, to the same direction it came from, which means it's going to break downwards, which is pretty much where, I mean, I got in a little bit late. I re-increased my position again, a little bit late because I had to wait to the end of the day, and that was a pretty strong downside day, right? I'm talking about this particular day, the 4th of December. And you know, the close was pretty impressive because the close was closing below both the 25,122, which is the mid-low key level here, also quite important level, but also below the 200-day moving average. Right, so that was the moment I knew that I'm probably on the right track downwards. And you know, according to the bigger picture, it really fits the situation, fits the conviction, the bearish conviction. Let me take you, we'll just refresh your memory a little bit with regards to the bigger picture. So we have a pretty impressive trading range, right? This is the blue system that tracks price pretty much from the beginning of 2018. So up until 2018, and also this is a pretty important point to stress, up until 2018, we're talking about almost 10 years of only one way move, which is up. Ever since the end of the credit crisis, right? Which was the beginning of 2009, the end of 2008, price was only going up. So we're very, very high. We're just a point to remember. We're very, very high. We're just trading sideways right now. It's not even a downside correction. This is what I call a sideways correction. This is a classic consolidation, right? It looks like a downside correction, but it's actually a sideways correction. You can see how it trades sideways, right? Now, it's only, look, this trading range is not very well established. I have to say this as well. We only have here, right now, we've just finished the third leg, right? The third leg. Now, the third leg usually is not the one to break out of consolidations. And now I'm talking about the potential of a series, a mega downside correction, not what we've seen so far, The real bloodshed will only begin beyond the bottom key level. Take a look. I would even write down this number, right? 222-222-62. This is the number. This is the magic number. This is the last line of resort. Beyond this point, the market, potentially speaking, can fall so far down that what we've seen up until now was just, was nothing. Was just a playground. Nothing serious. I mean, we're just trading sideways right now in a pretty wide trading range, no doubt. It's pretty wide. However, if price will break below that bottom key level, it can fall pretty much all the way to 10,000. Just think about it. All the way, just a downside move all the way to 10,000 will pretty much represent a typical, but pretty full capacity 61.8% Fibonacci correction, and I'm talking about the whole trend starting back at the beginning of 2009, right? That's just the downside potential. But I have to say this, I think it's more likely that price would actually dip a little bit lower, take our final destination, which represents, you can see what it represents, right? Just the previous low, that's all. I suspect that price will take the previous low just as it did with the previous high. Take a look, right? So I think it's going to dip a little bit lower. It's going to take the previous low, and then I think it's more likely to reverse, to begin reversing and begin building up the next upside leg. All right, most consolidations, most trading ranges end up with 5 or 6 legs. We only have 3. Not to say that we can't have a breakdown on the 3rd leg. We can, but it's not very common to have that, which is why I think we're going to have an upside reversal and the next upside trend, right? But now we're on the downside, no doubt. I'm not even thinking about catching a falling knife. Not only I want to see price takes that 23,100, but I want to see it dip a little bit lower and beginning to turn around. I want to see visible turning around with at least 2 consecutive positive bars. In this case, that would have to be weeks, 2 weeks, right? Where price is preferably goes back and cross back above that previous low, which was a support up until the break and would be a resistance once broken. Anyway, so that's pretty much the bigger picture, right? So obviously I'm still on the downside here, but probably not for long. But I want to show you what the situation in the gold, because that's actually fascinating. The gold is a classic safe haven, right? Really, probably the number one safe haven in all the assets I can think of. It's the gold. It's a classic. Whenever there's problems in the markets, right? Whenever there's turmoil in the market, the first asset that everyone, all investors run to is the gold. So we know that the gold is highly correlated with the market, only inversely correlated. The correlation is high, but it's inverse. So pretty much every move that the market goes up, we see the gold goes down and vice versa. Now, it's not perfect, it's not 100%. It's on the rough edges. Generally speaking, that's pretty much the situation. Especially in these types of periods when we have kind of, a little bit of panic in the market, because panic triggers a direct run to the gold and silver and other precious metals, but first and foremost, the gold. Let's take a look at the gold, what it has to say, because if the gold points out for an upside trend, for an upside move, then I think we got a match, right? It pretty much supports the bearish situation we have here right now, because even though I specifically said that I think at some point price will come back, reverse, and begin the next bullish run, I still think, potentially speaking, we have quite quite a distance. I mean, we can go all the way to the very bottom key level, touch base, and only then reverse, right? So we're talking about 22,262. It's not too far, but it's, you know, there's still enough distance to go downwards. And I think we will. So let me quickly switch to the gold, and we'll examine the situation on the gold. So yeah, let me start with the bigger picture, right? So this is the gold. I mean, it's easy to see that the gold is going up, right? Pretty much, let's see from where, from August. Pretty much from August 2018, the gold is on the upside. And you can see that the downside move here pretty much started around September, 1 month later, right? So as you can see, they're pretty correlated, inversely correlated. As the gold moves up, the market goes down. And here's what I see right here on the gold. So this is the bigger picture. This is the monthly chart. Just a few words here. Take a look at this move that had started around the beginning of 2016, guys. We're talking about almost 3 years, where all we had here is only 3 legs. But I think this is the beginning of an important trading range. Take a look. This was the first leg, followed by the second. Take a look at the third, touching base right on the minimum level required to be considered as leg, which was the 1182. Now we can also see how it found a huge support on that key level, right? And began to turn around. Now I think price can push all the way to the upper section again, at least the level of 1315. So it points upwards. From the bigger picture, we can see the potential on the upside after price had failed to break below 1182, right? It was supposed to break it if it was to continue on the way down, but it failed, and you can see that it's picking up pace, right? Now let me take it to the weekly chart, because here, this is where it becomes even more interesting. I was able to find a second trading range, a lower scale sideways movement, and I applied a second setup here. This is the blue system. Take a look at this one. And I'm referring to this move. This was the first leg, followed by the second, and this is the third leg that, by the way, broke out of the system, right? Broke below the bottom key level here, 1207. But I found it to be remarkably interesting because the reaction here was just spectacular. So we have here, take a look, we have 2 levels. We have the bottom key level of the blue system, the lowercase setup, 1207. And we have the 1182, which we've just mentioned, coming from the bigger setup. This is the mid-low key level of the big setup. And you can take a look at what happened here, right? At first, price broke below 1207, and it went straight to the 1182. And take a look at this touchdown. This is really amazing. That spike going all the way back, boom, closing back inside, and then the circus began. Because price just kept challenging both levels from above and from below consistently. Take a look, spikes all over the place. But all the time, it kept trading well within these 2 limits. It was pretty well trapped between these 2 levels. But the bigger level is usually the one to prevail, is the stronger one, right? The bigger setup, that's the black system, with the mid-low key level here, 1182, had better chance right off the bat because it's a bigger key level. And it actually won. It won the battle. Price broke to the upside. No surprise here, right? The market is nosediving, so it's pretty natural to see the gold moving upwards. But here's what I find to be really important. Not only the fact that it broke on the upside, but the fact that it came back just a few weeks ago. And take a look at this magical moment, guys. Now this is really good stuff. This is the stuff that I value the most, because not only I saw the break above 1207 pointing up, potentially for an upside move, but also this is a classic reconfirmation of that bullish conviction. Price basically gives us a stamp on the validity of that move. It came back to that same key level and it acknowledged that key level from above with that beautiful spike, turning around and beginning to move away. So that's very important. That's very informative, right? Very informative, very foretelling. Now, according to this technical situation here, it is pretty certain that the gold will continue to move upwards at least till it hits the 1264. And I say at least because it is more likely to break above the 1264 and reach the higher section. And you remember the level I was talking about when we analyzed the monthly chart, the 1315? Right, so that's still going to be our main focus. And a little bit above that, the 1328. So all this range between 1315 and 1328, I believe, is the magnet field. It's like a magnet field. It's going to attract price to it, and it will probably repel it once price will reach this area. Now that fits pretty much, that fits pretty well the picture that we were just analyzing coming from Wall Street, from the Dow Jones. And as we know about the correlation, the inverse correlation, it is no surprise to see the exact situation that we see here, right? So there you go, guys. I think we have some more upside move on the gold. I think we have some more downside move in the stock market. We have I just explained the implications. If we break below that important bottom key level that we saw on the Dow Jones, then the downside correction could significantly accelerate. But that's not the situation right now. So far, we're still in the safe zone, kind of in that big system that we saw coming from the monthly chart. So yeah, that's pretty much it. Yeah, I hope you enjoyed this video session today, guys. If you liked it, give a thumbs up. If you didn't like it, give a thumbs down. If you have questions, don't forget, put them in the comment. I'll be sure to get back to you. And that's that. Till next time, be well.